Thank you for sticking around. This is the last panel discussion in this hall. I would like to introduce العقل المفكر, Ms. Rasha Ghamlouch. She's the Senior Program Manager at Arabnet. She's going to lead this session, and it's about exploring the landscape for financial technology innovation in emerging markets.
So thank you all for sticking with us till now. I promise to make this as entertaining and controversial as possible. I would like to first thank my panelists for joining us. I think we're very honored to have them, and we're glad to have this discussion, especially having the central bank with us will bring a quite a rich perspective to the panel. I'd like to welcome Kasper Holst he's a senior vice president from Fastacash, and Dominique Corradi from Middle East and North Africa Digital Financial Services leader at Ernst & Young, and Khaled Bohsali, the executive director of Foreign Affairs Department at the Central Bank of Lebanon. I'd give you the microphones just to introduce a bit about yourself and what do you do, and then we'll move into more juicier topics. Go ahead.
Right. Thank you very much. My name is Kasper. I represent Fastacash. Fastacash is a solutions provider. We're a Singaporean-based company. I myself are based in Dubai, looking after the Middle East and African region. Fastacash is a solution provider that enables people to transfer value, be it predominantly cash funds via social media. And an increasing market, obviously, people are looking for ways at which to transfer money seamlessly, fast, and cheap, of course. What we do is we team up with the banks, believing that banks, they have the rails and the capacity to move funds. We enable the banks, the exchange houses, wallet players, and e-commerce to help them be where their customers are and be able to help them move money via social media of any kind.
Dominique?
Hi, I'm Dominique. I'm a director at Ernst & Young Advisory in MENA, based in Dubai. So I'm in charge of developing the consulting service offering for the banks around digital. And I have recently led a report that we have developed based on a survey on digital banking within the GCC.
Okay, Dr. Khaled.
Hello, my name is Khaled Bohsali. I work for the Central Bank, the Executive Director of Foreign Affairs. I'm based in Lebanon, definitely the Central Bank is in Lebanon. As you know, the Central Bank is regulating the banking sector here in Lebanon and the financial institutions. And also we cover also the money dealing, and we regulate money dealers. Today they are going to discuss, the panel is going to discuss the fintech. We will see the pros and cons about that, and I hope we will be positive about it.
Great. So I think I'm going to start with an anecdote that I shared with the panelists off stage, and I wanted to ask people, question number one, would you borrow money as a loan from an institution that is not a bank or not a financial institution? Just a high raise of hands so I can see them. Okay, very few people. If the bank was giving you a 7% interest on your loan, and another institution, also a non-financial institution, is giving you a 2% interest on your loan, would you take the 2% loan? A raise of hands. And would you take the 7% loan? Oh, no one takes loans in this.
So there's a lot of people who won't take a loan. Excellent.
Okay. Great, so that gives us a bit of an overview of what the people in the audience already think. My first question to the panelists is, what is the size of the opportunity for financial technology? There's a lot of banks in the region. Lebanon has a massive amount of banks, so does UAE and other markets as well. Is there a growth towards more financial technology on the bank sector as part one, and as independent financial service providers as number two?
Well, obviously, there's plenty of room for digital transformation in the banking sector in the Middle East. I think particularly if we compare to other regions of the world. I've had the pleasure of living in the UAE for 3 years now, and I was absolutely surprised, if not appalled, to see the clunkiness of online banking systems there. not speaking of any particular banks, but that's sort of the general. So of course there is plenty of room and necessity for banks to transform digitally. And of course with that comes also opportunity for alternative or supportive financial solutions providers to either fill a gap or to assist banks and financial institutions to reach to a level that their consumers are really looking for.
So it's actually quite difficult to put a final number on the size of this market. However, we have made so the survey I was mentioning at the beginning, where we've interviewed about half of the banks within the GCC, and we've identified, I mean, based on some questions, we've identified, the amount of budget that they do have for their financial transformation, for the digital transformation. And basically, overall, within the GCC, we're talking about $500 million, which are actually set aside for this digital transformation. So it's not covering the whole MENA, but at least it gives an idea of the size of this initiative. The second part is probably about banking inclusion. We are in a cash-based society. Within this region, and actually more than half overall of the cash exchange are done outside of the banking sector, with a huge pressure from the regulator, but also from the rest of the world, actually to be able to move this into something which is probably more controlled. So we can assume that this will also create a huge wealth of new opportunities.
So, Khaled, do you think that, what is the appetite for financial technology one? And if you look at Lebanon specifically, we're slightly behind on the financial technology side, on the financial sector. But also, do you feel like having money being transferred more via banks or in a more regulated format than cash payments, is it better for the central bank? Is it better for the economy more broadly?
Actually, I have to mention that our society is a cash society. So people, they enjoy cash, they like to carry cash. This is one side. The other side, we as a regulator, we understand that we have to go, more digital. Because with digital, you can save a lot of associated costs. So there's a lot of, traffic jam. We understand there are a lot of, payments that can be made online. And people may like that, and they may encourage that. We encourage that, and they may also adopt. But the issue that if you want, for example, to establish any electronic platform, related financial electronic platform, you need to take a license from the central bank. This is related to a circular that was issued in 2000, long ago. The central bank is aware about the need of digital transformation, but however, we need to protect the investor. This is the bottom line.
Okay, so you're saying you're open to have more digital companies or digital solutions, you just need them to be regulated.
Exactly.
Okay, but does that mean you can have companies open up that are not banks that can get licenses from the central bank?
They must have a license. The circular didn't mention if they are banks or non-banks.
But a financial service license.
Any financial service.
Just to clarify to the audience.
Yes.
Okay. And do you see that, so in Dubai, for example, you could do a lot of your payments online, but now there are startups that are working in Dubai on more financial technology and alternative payments. And we see that trend internationally, but we don't see it yet in the region. PayPal is available in the UAE and Saudi Arabia, but it doesn't work in Lebanon. I don't think it will work in Lebanon anytime soon. But do you feel that these services are impacting the value of the bank or the relationship between the user and the bank?
Actually, banks usually, they take fees to transfer cash or to transfer money for wire transfer. So PayPal or any other model of payment that may be provided by Apple Pay or something else, that would create also a disruptive issue for local banks. And maybe they would like to become more into corporate world more, the banks. It depends on the bank and its approach.
Okay. So Dominique?
Well, the bank, as we do know them, will continue to exist. I mean, from the analysis and from what we do understand, and we cannot see from the overall view that we do have of the market, the bank disappearing anytime soon in the region and being split into different businesses. However, firstly, they will be impacted by the new technologies. This is something which is quite clear. And secondly, they do not serve all the banking needs and all the financial needs of the market, which creates plenty of space, for specific organization and financial services, institutions or organizations actually to cover that. We're talking about maybe payment banks. We're talking about peer-to-peer lending. We're talking about serving also the subprime market, which cannot be served as such by the banks as they do exist.
So Kasper, you guys provide a social interface for payment for banks. What's your target market for that?
Plenty of target markets, but to pin it down really to domestic transfers, peer-to-peer transfers, peer-to-merchant transfers, and one of the very big areas being in the GCC and the MEA region is international remittances.
Do you feel like by providing such a service, you're reaching people that have previously not wanting to deal with bank transfers?
Whether they don't want to or were not able to is probably an even better way of putting it. It's well known we have a large amount of either unbanked or underbanked people, both in the region but also their relatives. I mean, the GCC countries are known for having a huge amount of foreign migrant workers who are remitting money every month back to their home country. Historically, presently, the problem for them is that it's rather expensive and it's rather cumbersome to make these transfers happen. They have to go to a brick and mortar, to a physical shop to actually hand in the money and make the transfer. And secondly, the recipient in the other end may be unbanked. So what they're bound to do is they can only relay the money to one individual, one so-called trusted relative in their home country. The implication of that, in many cases, is that they believe to have a trusted partner in their home country, could be their brother, whatever, and the brother is then supposed to take that money and use it to pay for her, if it's a domestic maid, for her children's education or whatever, but the money is spent for all other purposes. So our point being that over time, if we can help to enable both the banks, stimulate the banks to make it easier for people to make remittances, and we can do it via social media, we are encouraging and stimulating the end users to be able to make more transfers on a monthly basis and directly to that individual who actually needs the money. So it's a matter of adhering and adjusting to not only consumer behavior, but to very much to consumer desired behavior.
So with that, we talk about customer behavior and adoption. And I think when we did a small survey here, it wasn't very successful. I'm sure if you did it in a different room, it might be different. But consumers want things that are easier to use. So Arabnet's recently done a research which will be published soon, fingers crossed, by the end of the month, on banking behavior in the Middle East. And we found that people that are banked, that do use digital banking more specifically, use it because it's available 24/7, it's convenient, it's easy to use, it ticks all the convenience boxes. And those that want to use it but don't, would use it if it was 24/7, convenient, easy to use, and all that stuff. Which brings up the question of, since digital and mobile banking are providing that kind of alternative, and there is an appetite for it because even those that are not using it want to, how far do you think people are willing to go to push the banks to do this? And and do you think financial services providers right now, whether they're remittance companies or banks really, are willing to provide these services?
If you want to talk about consumer behavior, I guess when it comes to payments, there's no problem. People would love to pay through mobiles. Okay, there's no problem, and to have not to go to bricks and mortars and have 24-hour service available. But when it comes to investing financially, I want to ask the audience here: Do you follow the crowds to invest?
Can you repeat the
Follow the crowds to invest? I mean, if you go and see social activism towards, for example, a certain financial product,
Okay.
and there are a lot of likes, a lot of positive ratings. Do you follow? I don't know. Let's ask the audience.
I'm trying to understand the question. Social activism towards a specific
Towards
financial...
a specific financial product that is not regulated or it's not,
So if there's an app that you can pay peer-to-peer with and it's not regulated...
either peer-to-peer or, for example, like have an investment somewhere like portfolio management. You can put $10,000 and they tell you you have IRA, for example, of...
And it's not regulated in Lebanon.
If there's a product that is not regulated...
So would you
financially, do we follow the crowds? And
would you use a financial? Would you put your money, let's say, in a mobile wallet that is not regulated by your local government? If your friends endorse it, if your friends are using an app that, can you show a raise of hands? Okay, we have a few people.
So few believe in social rating because rating agencies. They usually do a scientific approach to rate institutions. So social rating is not based on scientific approach, it's on appetite. And if someone is taking a wrong decision, may push or encourage others to take the wrong decisions just to appear like it's okay and not to hurt his or her own ego. Do we agree on that or no?
But then that says as well that, okay, Uber exists. It is an appetite, it's a need, it's not financial, but it's causing riots in some countries, yet regardless of the riots, adoption rates are rising. So on-demand convenience still sends to Trump security, like we heard in the panel just before us, or our willingness to give up our data, or other things. So do you think it's a matter of time, or it's a matter of how much social traction this can gain?
No, it's about, when it comes to financial decision, it must be regulated by a third party, independent third party that has no interest. For example, a central bank doesn't have any commercial interest. Okay, it's for the it's public service. Okay, it's for interest of people.
I think most people are accepting and interested in having regulated services, particularly when it comes to financial related services. It's my money. I'm transferring my money. I would have an expectation that I'm somehow shielded if something fraudulent happened. Therefore, there's every reason to have the banks, and there's every reason for the banks to be regulated. The matter is more about how do you regulate? How good are the government bodies? How good are the regulators at staying at pace with technology? I think Uber is a great example in terms of, people are rioting, but it's not the users of Uber that are rioting. It's the taxi drivers who are rioting, and for a good reason. They are rioting because they are regulated. And all of a sudden, some disruptor comes in who can play as an unregulated player in a market. But the governments haven't been able to alter and modify the legislation in due course. So back to regulators, it's all about them having a very, very up-to-date understanding, influence politicians to really understand what does it take to drive digital transformation the way it needs to be driven, the way the consumers want it.
So do you think, for example, if there are enough people, and maybe it's not a deregulated apps, but for example, there has been attempts at peer-to-peer payment apps within specific banks that have more or less failed, I would say, because the adoption rates were very low. Even though we see that there is an appetite for mobile banking on a specific level, why do you feel that some of these apps are not picking up?
I think one of the critical things about an app, and this is not just about the bank's app or any other app, apps in general, it's all about the user interface, the user experience, and all about making it smooth, crisp. User journey has to be crisp. I think that's bread and butter for any app. And I think that to some extent has caused failure for different apps to really take off. Second thing comes the marketing. I mean, 5 years ago, it wouldn't take as much as it does today to really make an app fly. Even for a bank to promote an app and to make people know about it, and from there to actually make them use it, adopt it, takes a while. I can give another example from Denmark, where I'm originally from, as my accent might have already revealed. But in Denmark, you had mobile pay by Danske Bank. We're talking about a population of 5.5 million. They introduced this as a peer-to-peer payment app. And within 9 months, I believe it was, they had 1.5 million users. And I think now today they have around 2.5 million out of a 5.5 population users. So that's an extremely successful app and just speaks volumes about if you make it crisp, seamless, it flies very, very quickly.
Dominique?
Yeah, your question directly relate or is covered directly by the survey that we have done. We've interviewed a couple of thousand people within the GCC just to understand, exactly this type of effect. And basically, what we've identified is actually quite interesting because there is a very strong appetite to go digital for the customer, and they do really understand the benefit that they can get out of that. But right now, when you do measure the overall transactions and see which one are going through digital, we are only talking about 14% of the transaction, which is just nothing compared to the appetite and compared to the expectations. And digging into more details to understand why it's like that, by and large, I mean, the consumer says that there is a lack of convenience. I mean, the user experience that they're getting out of the mobile banking app is probably not exactly adequate to what they want to do, and most of the time it's like the online banking, which is used from a desk on the internet on a laptop or a desktop, which is just moved to a handset. But the buying and the usage situation is totally different. The functionality that you do have on your mobile are also totally different, and this is most of the time not really considered by the banks, which are actually doing that.
So, do you think the banks in Lebanon are trying to introduce things that are going to meet more of the consumer demands? Or do you see an appetite in the banks to actually up their game a bit on the digital front? I mean, we've seen a lot of new products that are being introduced, whether it's tap to pay or location-based services that are providing you with offers, but these are maybe not always what the consumer is actually asking for. So where do you feel like the banks want to do more or should be doing more, really?
Actually, usually every bank has its own strategy first. Second, they know how to invest and how to attract more, people to deal with. So the issue is it's not technical, and it's about investment and about the market. And the market in Lebanon we're talking about 4 million person here in Lebanon. So how many of them are banked? This is one issue. The second issue is related. I understand that people would like. We're living the solemn with social local mobile now, and people they would like to become, to have easier way to access their financials. But the issue when it comes to banks, every bank has specific clientele, and every client has his own needs usually when it comes to banking needs. So the retail is almost the retail doesn't represent that big chunk of the market.
But that's because most of them are unbanked. Do you feel like they can provide services that can increase the amount of people using their bank instead of queuing up at the beginning of the month, taking their whole money and leaving?
I don't know. Actually, I think people, they would like to have maybe more, to have more access on corporate loans, for example.
Okay.
If you want to go to a bank and have a loan, you will sign a lot of papers. So that would create like an opportunity for banks to start with.
So doing more automated digital loan applications.
Yes.
Have you ever applied for a loan online?
Pre-screening, yeah.
Does your bank provide that service? Do you even know? Okay.
I think banks provide the form online, which you can then print, and then you can take it to the branch and apply for a loan. That's as far as it goes.
Well, I think a lot of the banks you can apply online. You can send the
preliminary
papers.
Study, yes.
You will need to pass by and put that stamp and sign eventually. But at least they can look at the papers and tell you if you're missing something. So you don't have to do 3, 4, 5, 6 trips to the
No,
bank.
but I think the point is we're touching on something vital here. It's about understanding its customers. And I think many banks are looking at traditional ways of banking. You know, they're all talking about wanting to get rid of as many branches as possible and enable people to bank from home, etc. And a lot of banks then introduced, say, 5-10 years ago, introduced online banking, as you said, and that was all good and well. And then they went into, they also all of a sudden realized, oh, the world is moving to app-based communication, so we better take our online bank and move it into an app. Not understanding necessarily that it's a completely different interface, and not least it's a completely different crowd of people we are addressing. And I think back to saying, do banks actually understand, the millennials, do they understand what is the behavior and expected behavior from millennials and others? I mean, we're sitting here, I'm safe to say that none of us are millennials, and do we actually understand what these people want? And so that, I think, is a starting point. You know, as our CEO said, his 20-year-old daughter, she's never set foot in a branch. She's never been in a bank. And we need to understand this. We need to understand that they have an expectation, say, why would I need to go into a bank? And they will expect to be able to take a loan application online. They will expect that they can sign digitally and do whatnot, and everything is done remotely. That's just an expectation. And I think banks and regulators, not least, need to adhere to that and need to adopt regulatory policies that actually not only allows it, but really stimulates it.
Do you feel that there will be enough market demand that regulators will have to do this eventually? I think I'll start with Dominique before I go to the regulator. Do you feel that there will be enough market demand for millennials specifically? Because definitely this is a millennial thing. Such an on-demand economy, definitely used to actually demanding things and getting them on your phone. Do you think there will be enough push for demand for digital banking, digital financial services more broadly, that the regulators will have to comply at some point with certain regulations, of course?
Well, going back to the initial role of the regulator, and I speak in the presence of a central banker, so, but it's really about protecting the financial system and making sure that you know, the deposit of the customers are safe. This is the initial role. And when it comes to going to regulate, you know, some functionalities of the mobile banking, it's not always extremely clear about the reason why it should be regulated. And that's the first part of the answer. And there is another one, which is that the regulator is not in charge of the legal framework. Like, if you don't have the existence of an e-signature, you know, legislation within the country, then you are never going to be able to approve any, you know, online onboarding, for instance, because, you know, actually when you do open a bank account, you sign a contract, and if, you know, the value of your signature does not exist because there's no legal framework supporting it, then the regulator will not be able to help. So it's really a combination of both. There is also one part which is interesting. Recently I've read that crowdfunding was actually something which was which was replicating, you know, the well-known Ponzi scheme from Madoff back in 2008, meaning that within China, I think that we're talking about more than 12, more than a dozen of Ponzi schemes that's been created on the back of crowdfunding platforms and systems. And here, there is definitely a risk and definitely something that should be regulated in order to avoid having such a system.
I'm a crowdfunding junkie, so don't tell me things like this.
Well, better you know.
Well, but it's also a matter of faith. I mean, there's a lot of scams that happen on these platforms, but I think there's quite some strong statistics that show that probably most of the time you're not scammed. Although you could do that on any e-commerce website, you can get scammed, or on eBay, really.
I think everybody agrees that regulation is necessary.
Definitely.
And it's not a bad thing to be regulated. I think even the banks, they acknowledge it, they like it, they embrace it to an extent, of course, that it becomes costly and they need to overwhelm it to the end users in one way or the other. But I think everybody understands that regulatory is necessary. I think what also needs to be understood from regulatory bodies around the world is that we've talked about a global economy for many, many years, and I think the financial institutions are now recognizing and seeing that it is truly becoming a global economy, because you are now seeing that could be Facebook, Facebook Pay or other types of payment mechanisms that are de facto bypassing local legislation, like it or not, but that's what's happening, being regulated in a different country than the person actually taking a loan or the person actually remitting funds. So that maybe calls for a different type, and I don't know the complexities of that, but probably calls for a different type of global regulation that becomes much stronger. Unfortunately, global regulation often has a tendency of becoming the lowest common denominator and then becomes over-bureaucratic, but that's probably not the debate here.
So I think we go back to that question is, do you think there will be enough change and demand for more digital frameworks that it would be impacting of regulations in the next 5 years?
The main objective of the central bank, one of the main objectives, is to improve to maintain financial stability. So starting from that objective, we need to protect the investors. So whenever a platform is regulated, there's no problem. If it's not regulated, it may become a digital financial Ponzi scheme. So this is the main issue. So, and if I want to talk about the consumer behavior, we live in the Mediterranean area, so people, they like to socialize. Usually, a bank client goes to a bank to have a cup of coffee, to have ego massaging, to talk with people. Okay, the differentiation is about customer service, about people, they are welcoming the client. On a platform, or we are witnessing a lot of issues now, and a lot of, maybe jokes about people, or we're seeing photos, people are holding, their mobiles and not talking to each other, but sitting together. Are they using the mobile to chat? I don't know. So we're seeing such issues and such photos on the social media.
I don't know if that's an issue. They might be talking to other people they'd rather talk to than the people
I don't know.
sitting with.
And we're pushing people not to drive and use their mobiles. So when it comes also, if you add the financial aspect or dimension to the mobile in full, so I don't know how they will drive with a lot of traffic jam here in Lebanon.
Well, maybe it'll help us solve the traffic jam that Dominique was struck in earlier. So I just want to take a couple of questions, like one question from the audience. We don't have time much, so we'll have to, she raised her hand earlier.
I'd like to know the status of the regulation in the emerging countries for fintechs or other companies that does a bit the same mobile payments, etc. So in Lebanon, we know that we don't have much regulation, but I would be interested to know if there is anything in the emerging countries about regulation or laws that would regulate these markets.
So you're looking, what examples in emerging markets of regulations that have allowed some financial technology to take place? I think the leading one would be M-Pesa. I don't know if, one of you can explain a bit more about that, for example. In emerging market solutions, financial solutions in emerging markets that are regulated but are changing the markets the way they work.
Well, I can tell you about the Middle East and about the GCC, where, currently it's really, we're talking about shadow banking. There's no regulation, for all which is creating some problems, as we've mentioned it. But right now, the level of regulation is extremely low for everything which goes out of conventional banking.
I think that, I'm not sure there's a lot of statistics on that, but one example would be in Africa, there is financial currency. You can send by SMS, you pay each other by SMS, just because the currency is so low that you carry so much money to pay for anything. M-Pesa is one of the most famous ones. There's a bit more advancement on that in Africa, but that becomes from a really political instability and social instability that people can't really carry cash around. I'm not sure there are any, we don't have people that are part of the African market, but we're looking more at Middle Eastern market. Generally speaking, the Middle East is very unbanked. I think UAE is about 75% banked, but when it comes to most of the region, I'm not sure what the number is for Lebanon for people that have bank accounts.
I guess one of my colleagues can answer maybe.
60% of people in Lebanon have bank accounts. Okay, so actually it's pretty good. Egypt is one of the countries that has 32%, so very low. I think we can work with 60%. We can get some more out of that. But then how much of the 60% are people that queue, take their salary, and leave? That's the question mark. I think we're out of time, so I need to wrap up.
Maybe we can take a question from Rema.
Okay, I have too many questions coming up. I think this is going to be the last session here, so we can have lots of discussion. The panelists are here. We can have some discussion afterwards. I'm sorry, I have to wrap up. One last word from all of you, which is, would we be paying primarily with our mobile phones in the next 3 years?
Absolutely.
Okay.
Absolutely, yeah.
In 3 years? Okay. Khaled?
Mobile payment?
Paying with our phones, I mean,
Pay with our phone?
regulated, hopefully.
Already we can do it now.
We can do it now?
Yeah, we have Tap to Pay, CMO, we have a lot of platforms. So it's about adoption from people.
Fair. Okay. Well, Simba closed down, so. But they merged, to be fair. To be politically correctly fair, they merged. Okay, I'd like to thank the panelists. This was very insightful, and thank you very much for your time. And thank you for the audience for sticking around. And they're going to be here for further questions and debates. Please join them ahead of the stage. Thank you very much.
Thank you.
Thank you very much.
If you'd like to have some coffee, we have 15 minutes coffee break outside, and then we'll all go to Hall A in order to close the day with the creative combat and the award ceremony.